Good afternoon, everyone. Welcome to our 2017 halftime report. I am Lou Desepoli from the Heritage Financial Advisory Group. Thanks for spending a few minutes with us. We just want to take a little bit of time, explain to you what's happened for the first 6 months of the year and some of the things I think we could look forward to for the second half of the year. So, and as always, once you watch this, if you have any questions, please feel free to call us. It was a very solid first half of the year in the financial markets, and there are some reasons for that. Basically, it's all economy driven, starting with strong corporate profits. Profits have been on the rise. Companies are earning record amounts of profits and holding record amounts of cash for reinvestment in people, in equipment, and acquisition. So that's all good. And as a result of that, a lot of the companies that we own have been doing well in terms of their stock price. There's also a lot of small business optimism, possibly with the relaxation of some of the regulatory environment. There's still some things that are up in the air on that, but as some of the red tape is eased a little bit, that could be very well for small business, and we do have an allocation into our small and mid-cap index that we utilize. Unemployment has been coming down. Right now it's about 4.2 to 4.3%, which is good. But what we need to see along with a declining unemployment rate is the increase in wage growth. We're not really seeing that yet. It just means that a lot of people who are employed and earning money are not really getting the increases, but hopefully in time that will come. Another big factor is the money that's coming back into the U.S. in terms of American companies that are bringing some money back and foreign investment here into the United States. A lot of people believe that the U.S. markets are really the best place in the world to invest, and we would tend to agree with that. There is the most opportunity. We also saw in the first half that technology, a lot of the different areas of technology, from companies that to Apple and Amazon, to software companies and equipment makers, technology has been leading the way. But with that said, technology, as an investor in technology, there can also be some volatility, and we saw that in the last couple of weeks. It has since stabilized, but there are times when technology will be the leaders of a market sell-off, and it hasn't been bad, and it's actually come back. What do we see for the second half of the year? We still have our eye on the increase in interest rates. There have been 2 rate increases this year. Before the year started, the Federal Reserve was anticipating 4. We may not get any more increases in rates, but perhaps maybe there'll be 1 more. So the market always reacts to that. So we'll be looking at that. But even still, if there is an increase, it really shouldn't be anything to sidetrack the growth of the United States economy. We continue to see volatility as a theme. We do not believe that that's going away. That's here to stay. As you all know by now, I'm sure that the market reacts to non-financial events. And by that we mean things outside the world of finance, mainly what's going on in DC and the political gridlock that's going back and forth. The market moves on healthcare. Whether we're coming out with a new plan or we're keeping the old plan, the market will move in either direction. And DC has been gridlocked on that. So we continue to watch that. But that's something that if both sides in Congress can agree to, it may be an overall benefit that will trickle over into the financial markets. Tax reform. We've heard a lot about it. We've discussed it before. We'd like to see lower tax rates across the board. Most people would. But again, it's still too early to say where it's going and how will the market respond to taxes. We would love to see corporate taxes lowered so that more companies will bring their cash that they've earned overseas back into the United States for the build out of infrastructure, highways, bridges, airports, and stations. But that remains to be seen if that'll happen. But those are some of the things that will contribute to the volatility in the second half of the year. There's also the global or foreign aspect of what's going on around the world. That has nothing to do with markets and finance and corporate earnings. As we all know, and we watch it very closely, what's going on with North Korea, China, Russia, and that whole relationship there, or lack of one. That can certainly cause some havoc in the markets. But I will say right now, from a lot of the fundamentals we look at, the markets are stable. They're not gapping up higher every day. There is strength. We're looking for areas. We're looking for value. And at the same time, we are controlling the risk that we take and trying to deliver the returns. Time will tell where this market will go. And people do ask, and I'll just put this out there to you, well, the markets are at a high or close to a high. Doesn't that mean that we are in a period where they should be adjusting? Not always. All market highs have been met by a previous high. So just because they're at or close to the high doesn't mean that you're necessarily coming into a 5 or 10% market correction. Of course, that'll happen. We don't know exactly when, but right now we see the basic fundamentals of the market being relatively stable. But as I just mentioned, anything that's non-financial in significance can certainly disrupt that very quickly. So as always, we're looking for protection, we're looking for good value, we're looking to deliver performance relative to what our clients take as their risk profile. If you have any questions, we would love to hear from you. Please call me, shoot me an email. We'd love to have you come into the office, show you more in depth as to what we're doing. But we're happy where we are. We like the possibility going forward. And please reach out. We'd love to hear from you. Thanks for tuning in for a few minutes. We hope you have a great summer, and we'll see you soon. Thank you very much.